Check 1, 2, mic check. How do I even put good morning, good morning? I don't even know what I'm doing here. I'm trying to put a... All right, here. Hold on 1 second. All right, so I'm going to grab some coffee here. I've been awake since about 4 o'clock this morning. We're going to go over a few things, though. Give me 1 quick second here. I got to put a title card up. Come on now. Just download it. God, everything takes so long these days. Everything's a garden. Everything is, you know, like everything needs an app, right? App for this, app for that. Like buy some lights for my backyard, and they're like, hey, you know what? You need the app to run those lights. I'm like, does everything really need an app? Can't there just be? So there's SPX, right? SPX just ripped faces. Hold on here. So just a note here. This is the call wall, okay? So I'm gonna do a quick brief with you. Just a really fast brief here. The call wall is above here at 5,500, okay? So we're going to need call development to kick in to go higher. There's another gamma level above at 5550. I'm going to get the new gamma numbers for you right now this morning. But the idea here would be, oh, look at that. The idea here would be that we need more development of calls to the upside. We're going to talk about that too because they'll likely send us down for a bunch of other reasons related to gamma. But the one nice thing about this is that we are now firmly above the gamma flip at the moment. Firmly above the gamma flip. We're above local resistance. We're now building a base here, which is really nice to see. But swooping back down would be very easy to close this gap down below. So be conscious of it. Be conscious of where we are too. 5,500 is, you know, you want to take a peek at. We want to snap a line at home on a screener of 5,500, so that if we begin to break down, do we hold on 5,500, or do we roll down below it? Right? We don't want to be rolling down below 5,500 in here, because we will close that entire gap that was left behind here. Okay, just pay close attention to it. It's roughly. Give me a quick second here. Gamma flip is at roughly 548, 548.50, maybe right in here. It's like somewhere right in here. You don't want to see that get lost. It's not the gamma flip. Sorry, that's just 5,500. The gamma or the gamma node at 5,500. So you want to stay above this in case you want to trade these upper ranges. And there's a few key points about these ranges here. I want you to be focused, of course, on 550, which was breached. That's bullish. And whenever we approach these nice round numbers and resistance, right? The yellow bar is resistance above. You want to see what the behavior is. You want to see, like, do we auto reject 550? Depths of hell. Do we break above it and trade 552 and some change to come back down to consolidate on 550? Do we auto reject? Do we break above resistance to come back down? Like, all these things matter for future predictive performance. So you want to see what happens in here and just be watching it closely. Now, we should be triggering buying today as well. We should be triggering not just CTAs, but a whole class of buyers will perceive what's happening as bullish. Also, the carry trade is being perceived as being put back on. We'll talk more about that later as well. So what this does is it triggers a ton of money that flows into the market, big money into the marketplace. Right now, the money that's in the market is dangerous for the market, and I'll explain that to you later this morning. Macro hedge funds are not the most quality of money, and that's who all these guys are from the absolute bottom. Like, all of these guys down here, this is all macro hedge fund money in here. These guys are dangerous. They are trading political moves, and they can be very volatile traders, right? They trade volatility. I'll explain more about that trade later on and how they trade, what their behaviors are like. We'll go into that later today. So you want to be triggering better flow, right? You don't want them rug pulling at any time. And I'll explain to you more on this later, how they could rug pull if no other money enters the market. One other note, though, this morning is don't expect CTA. I've seen some talk out there that the CTA triggering will be big, and it won't. It's not going to be huge CTA buying unless we see much higher highs. That turn in CTA buying, if we're coming down into like triggering CTA buyers, it still takes time for them to become big buyers, like nibbling, boom, boom, boom. That's where you get your major upside moves. That's where if that happens, if we get there, that's how we'll trigger a trade to 600 or 6,000, believe it or not. But not yet. We're not there. We're like right there right now. Like just making that turn right now. So don't get too ahead of yourself at the moment. What else? Before I got to get some coffee. But another thing too here would be just note that gamma node right there, right? Gamma. I'll write that in there. 5,500 gamma. Yeah, I guess I spelled that okay. Another note here too would be when you're watching this interplay up here, right? I want you to be aware of a few things. Excuse me. RTX sell is right here. Okay. This is on a daily basis. RTX sell. This is R3. So we already have our intraday expected move done out of the gate. So at this point, you should be taking the money and running, right? And just be observing the behavior as we interact with this and looking for the next dip buy, right? Where should the next dip buy be? Currently, it is sitting down in the pivot point at 542.88. I would be fascinated to look for a roll as the half-hour trigger and the hourly trigger march upwards to the gap fill from this morning in pre-market, right? So in the next hour or two, if you see these roll up, wouldn't be shocked to see price come back down to meet up with those things, right? Seems logical. Yeah, that's all I got on that, I guess. So just pay attention to that. Don't get too crazy. Don't listen to the FOMO. Just another day of don't listen to FOMOers. You put your own risk on in the markets. You take your own risks. You know what the risks are in this market. Whenever you're feeling like, bro, this is it, we're going up, it's always time to sell into those people. Let them get cut up here. Let them get all cut up in here. And then, of course, it gets pulled back, right? They're going to be like, yeah, bro, it's going higher. Bro, it's totally going higher, right? And they're like, oh, bro, I got in here. I got out there before it rolled down on me.
Inventories.
Always after, never before. Let them get cut up in here. You just look for your chance to take the next trade to the upside, right? When everyone else is afraid, you're putting risk on. Usual stuff, right? So we're going to do a few things here. I'm going to snap a line right there. I'm going to snap another line right there. Bam. I'm going to slap another line right there. Bam. And then we're going to look for, let me see here. The pivot point is right here. I guess I can put these in. This is the gap fill. And this is the pivot point right here. Get rid of all this, mute all that there, bam. Kind of get the gist now, right? Right in there. Make sense? You know the rules. As long as price is above the 1 minute trigger, we're going higher. You know that if we have a 1 and 5 minute trigger cross, we're going to go lower. Look for a bear plane for the upside move to be done. You know what that looks like, right? You've got, if you start to see this rolling down, right? Start to see that white line turning like so. At any point, you begin to see price break down in here, down below like this. Wrap it up, right? Any action like that, you know it's time to wrap it up. They're going to send it down and close the gap to the downside. Not until that happens, though. Congratulations to you. If you bought yesterday, I ended up closing my calls out at like 4:14. I didn't leave them on. I was afraid that this morning that they would slam it down for a minute and then raise it back up. I knew we were going higher, but I didn't want my calls to be like the same price at the bell. So I know a bunch of you did not close your calls into the bell last night, and you guys are fucking rich this morning. Like, I got 52 cents. You guys got like 272, 250, 260. You guys made fucking bank. That's like what is that? 1, 2, 3, 6, 7. That's like some of you probably made 700 or 800% in that trade overnight. So you should be rich this morning. None of you should not be rich. You bought a 100-pack, 1,000-pack, 300-pack of those fucking things in the bell yesterday. They were at like 34 cents, 32 cents, 36 cents bouncing around. They just fucking ramped into the close yesterday. And so if you were able to get paid this morning, congratulations to you. I had an order in for Walmart this morning, never got it filled. I got left behind on Walmart this morning. I'm a little upset at that. I was hoping to catch that like $65, $60 fill. Baba went down this morning. Walmart went up. We called Walmart. We were like, so yesterday we were like, hopefully we can buy 65, 60 on Walmart in the morning because it should rip faces off. And it did. It ripped fucking faces off. And then Baba, we said they would sell the news. They sold the news this morning on Baba. So that's 2 for 2 on ERs. And then one for 1 on 0 dates overnight. So if you made a month, you should have, like, if you were here yesterday, of every call, they were all correct. 100% on 3 calls. There's no reason you shouldn't be fucking rich this morning, one way or another. So congratulations to you out there if you're rich. I think Bork said this morning he's going to sleep in, drink beer, and eat donuts or something. So if you made money last night, take the day off. Do whatever you need to do. Celebrate. Let price come back to you. Always remember that price will come back. You'll always be given a chance to rebuy, and it's never just straight up. So even if we continue higher, there'll always be a chance for a pullback for you to get in. And we're going to go deeper into if we see CTAs step in, if we see corporos step in, retirement funds step in, retailers step in. You probably noticing at the moment this morning that premiums are higher. There's an implication, of course, then that some volume will kick into the marketplace. So keep your eyes on the volume in the market and see if real buyers start stepping in. Give me a few minutes here. I just need to get a new cup of coffee. I got to get another bottle of water, not bottle, but a glass of water to pound. And I've been awake since fucking 4 a.m. Like, I couldn't sleep last night. I was all, of course, you're all stressed out. Is it going to happen? Are we going higher? All that kind of stuff. So here we go. This is we'll make this one white. Make that one white so it's normal. This is the kill zone above. Make that one white too. And we'll make, this is the pivot point right here. So this is like your, hey, if you want to like bottom, like CaptainJimJames call lot down here. And then this would be the gap fill over here. This is all gap fill in here. Congratulations to you out there if you took the trade. Seriously, it was gangster. This is RTX. It's RTX sell. That's a whole zone. It's not what it's a zone. I don't know if you guys know that, but it's not quite one number. Well, it is. It's 2 numbers, but it's more of a zone than anything. And we got more to go. Like, we're not, like, IWM should fucking trade like 212, 215. It's turning around a little bit right now, but it should head higher. Well, it's pretty close. I don't think it's done. I don't think IWM's done going up at all. I don't. Not just at all. I think it's, we'll talk more about it later, but we got a whole bunch of stuff to go over. If you are able to, I would really ask you guys to do yourselves a solid and spend some time reading Wolf Street's take on ISM numbers, on CPI, PPI, and then wrap it up with retail sales. If you were to do that, it's going to give you a picture of what to expect and what is being priced in for 2025 right now. And when you're questioning, like, what's going on, why this, why that, all that kind of stuff, it'll give you a clear picture as to what's truly going on here. So hold on, let me put this. Let me put this. Hold on here. One quick second. That in there. Okay, we have an updated gamma picture. Let's go down bottom right-hand screen here. Let's take a look now. Let's go look together here, okay? So what do we have for an updated picture now? Whoa, nice. We have call development gamma coming, or gamma that matters again. Nice to see. Whoop, wait a minute here. Let's go back here. Come on now. All right, rotating charts. So your new call wall right now is at 55.50. You could make an argument that it's a little bit higher up here
Business inventories
at 5,600, but it's roughly here 94 million, 79 million up there. You're above the gamma flip. Actually, you could say that this is local resistance now. You actually say that's local resistance. That's the call wall. Gamma flips down there. Where's local support? Local support is now up here. Whoop. That's your local support. Your put wall is where? It's above. Not weak anymore. So your put wall is down at 5,300 still.
10 seconds.
Still down here. So what else we got here? Local support right there, 59 million. That needs to improve.
0.3.
That's weak. So be careful of this local support. It's suspect.
Index 39, lower than forecast 43. NAHB housing market index prior revised 41.
Still suspect. So just be. This is noteworthy. It's still suspect. Gamma flip down below here. I want to impress upon you again, right? So take a quick peek here. You could easily come up here, be like, yeah, bro, we're going to trade all that. Bro, it's going to be awesome. And then easy. Woof. Right through there. Wham, back up here, okay? Maybe not that deep, like right there. But you get the picture, right? Like it's easy for us to consolidate here, blast up, and then straight back down to the gamma flip, right? Something like that, and then you get your move to the upside. So be really careful in here, real careful in here. And let me see. I'm gonna post a picture of this for you in the Discord this morning. See if I can. Snap a picture of this for you and put it in the Discord. I don't have enough time. Like, I wish I could put out NDX Gamma for you. I just don't have the fucking time. I wish I did. I just don't. I could probably do this shit 24 hours a day. The amount of shit I'd like to get out to you guys every day that I just don't have fucking time to do. So there's your SPX Gamma. And I put that in the Discord for you. That up there. Yeah, sweet. Okay, that's good. I think that works. Give me like 15 minutes. I just want to I got to literally go to the bathroom, grab some coffee, all that kind of stuff.
Now only $99 a year for our real-time service.
And just in 1 minute's time, it will be the release of NAHB housing market index data. It's expected to tick up to 43, and business inventories are expected to rise 0.3%. Ten seconds. NAHB at 39, that's below the expected 43. Inventories rose 0.3% in line with expectations, and retail inventories ex auto revisions at 0.2%.
Let's see, people are asking about Tesla this morning, so I'm just going to talk to you briefly about Tesla. Still have zero interest in buying Tesla. They need to, again, I told you yesterday, they need to escape. That would mean they need to break above their daily trigger, backtest it successfully, and on a hourly trigger cross to the upside. No cares about Tesla, no interest in a trade on Tesla. Here, let's talk about Tesla really quick.
Breaking news here. 6th Street Consortium is set to
We got to talk about this because I know that these Tesla bulls get fucking annihilated. Hold on here. What are we doing here? What's going on here? Uh-oh. Tight here. We're going to talk Tesla right now. I'm going to come back on the show because I'm seeing lots of talk about Tesla. This is what I don't like about Tesla bulls. I'm a Tesla bull myself, but I'm going to explain why I don't like Tesla bulls. We're going to chat about this briefly. I think sometimes I don't like Tesla bulls more than I don't like Tesla Q. And I'm gonna explain it to you simply here. Why you can't trust Tesla bulls ever. Literally can't trust a Tesla bull. I'm going to explain it to you simply here. Hang tight here. Burp, burp, burp. Why you can't trust the Tesla bull. I'm going to make it very simple here for you. Why you cannot. Very simple. It's fairly easy. This is Tesla, right? It's Tesla, right? So you got Tesla here, right? It's like, yeah, baby, we're getting out. We're going up. And they get shanked. Yeah, baby. We're getting out. Woo-hoo! Shanked. So I'm going to tell you what I think. I think that you are probably trading a paycheck. That's what I think. I think you go to work Monday through Friday. You get paid. Friday shows up. You ring the register. And you slam down calls on Tesla. And some of them you win. Yeah, I won. Yeah, I won. And then they bring you down here. And you give it all back. Woo, made 15K. Hey, baby, made 30K. Gonna let it all ride. We're gonna get rich. I'm gonna quit my job. Wham. 0. Back to work. Woo, made fucking 20K here, baby. Woo, made 50K here, honey. Dude, this time I swear, I'm gonna take that 50K. We're gonna be rich. You're gonna be able to quit your job. Shank. 0 again. I'm gonna be honest with you. That's the truth. And where are we right now? Woo, baby. Yeah, honey. We're making money. Right? So I brought this up yesterday, and I'm going to bring it up again today because I'm getting asked in stream right now. And I know what you do. This is what 70% of you do. 70%. That means that 7 out of 10 people in this fucking chat right now are fucking liars. So let's look at it again. It's right here, right? And are you long here? Fuck no. There's like so much danger. It doesn't matter if you're right. Like, it actually doesn't matter if you're right. Because you still give it back every fucking time. You need to be right 9 out of 10 times. Not 3 wins and blow up my account. 3 wins, blow up my account. 3 wins, blow up my account. Can't do it. And I can't have it here in my show. And I can't because I need people to learn to win every trade. So even if you break out right here, you have major risk of reversal to the downside. Major. And I don't care if I'm wrong this one time. I know you're wrong enough that you lose. You wouldn't be watching my show. Let's be honest. So what you need, I'll show it yesterday. I'm going to show it again today. If the window, the downside is open right now to $100, whether you like it or not. So what you need is you need to escape. How do you escape? I showed this to you yesterday. I'm going to show it to you one more time again today. It's not good enough to squeeze up here. It's not good enough to squeeze right there. Not good enough to squeeze right there. Not good enough. You literally need to squeeze and beat this high right here. This one right here. I would say at least that one. So you need to be above 232 and then come back and back test. So if you're going to have escape velocity on Tesla, you need to trade above that number right there. Come back down, believe it or not. I know it's never coming back down. and begin to make your way in an attempt to escape. Just like that. And what you'll see happen is you will see the hourly trigger come up. Am I losing my stream right now? I think I'm losing my stream right now. Stream is good? Okay.
China's central bank governor says China will gradually shift away from a focus on quantitative targets.
If the stream is good, you need to see this price action here so that you can, with confidence, take the long trade.
With the latest and be on the bleeding edge of news.
Or experience a major low with a major velocity on a major low. Like those kind of things, you need to see those things together. You need to see like
92%.
higher lows on velocity on a daily basis. You need to see that to just start, which we haven't seen yet. And then you need to see improvements in price. Does that, like, all of that stuff needs to be together. Now, it doesn't mean we don't do it this time, but you can't lose every fucking time. Like, just can't. Can't repeat this behavior over and over and over. It's soul crushing when it happens to you. You know, it's like super soul crushing. You want to be a happy bull. You want to be a happy Tesla bull. Like, literally turn off social media. Like, it's just like, it's so easy to be a happy Tesla bull, but we get so consumed with the, bro, the turn's coming. Bro, it was up today. Bro, it was up that day. Bro, it was up that day. Bro, it was up that day. Yeah, well, then it came back down. Yeah, then it kind of blasted you down a little bit. Yeah, then it kind of blasted you down here. And right now, today, we're like, woo, yeah, I want to get some more calls, baby. So just be careful. Like, it's always better to have velocity on your side, be above the daily trigger, be back to getting the new high, back testing the hourly trigger. Like, it all lines up. And what you think is that you missed all this, but you really didn't, because you're down here, like, all this garbage, you didn't lose all your money, and you're like literally right at the turn. And this run usually lasts for 2, 3, 4, 5, 6 weeks. It's like this fear of missing out, right? When the real trade is over there. It's not in here. It's all fake. Fugazi, fake, 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 fake. Means nothing. And it would be just as easy for you to see this happen, and you miss this, and then it bounces back down, fails to get the new high. You're like, oh, Cap said if it gets above the daily trigger, we're all safe, right? You didn't get the new high, though, and then boom, right back down again. Then you're in the shits again. You're angry. You like see the $100, you go back to work, and you're like, all right, I'm going to try again. Trust me, I'll keep telling my wife this for the next fucking 10 years. Well, eventually we'll get it right. You want every trade to be a winner. And specifically, we're supposed to roll down here. Like, SPY should roll down here. Like, literally, SPY today should roll down at some point. So if they roll down, let's say they roll down Tesla today. What are you getting long right here? Is that what you're doing? Getting long right there? Fuck no, I'd be wrapping that shit up in there, wouldn't you? You got to wrap that shit up. Now you need to see this. So, I'd be back in over here somewhere. This is very risky in here.
Taking a look at the fear and greed index, 33 out of 100.
Anyways.
Fear and the crypto fear and greed.
Let it develop.
9 out of 100 also. Fear.
It's so hard. It's like
6.6% at 15.1.
You still don't have a closing green day here. Look at that. That is bad. Bad. That's bad. Even with the squeeze day. Bad. You need to see that improve. Series of higher. If you can close today on the high, I would say yes. You now have 1 bar higher. You're still not there. Still not there. And I don't want you to get trapped down here. So I am either a buyer down here, or I am a buyer on a new high and a back test of the hourly trigger. Right there. If you do that, every time with Tesla, you will retire, stop working a job, take care of your wife and your children and your future. You do that every single time, and you will be a 9 out of 10 time winner on Tesla. 9 out of 10. Literally 7, 8, 9 every time. And I cannot impress that upon you.
At 10:30
Enough.
a.m. Eastern Time, we get weekly EIA natural gas change. Forecast a build of 1 BCF on the prior build of 21 BCF.
I know I'm the bad guy. Cup's the bad guy. I don't want to be the bad guy to you guys. I want to be the good guy. I want you to hammer into you how to make money regularly, every day, every month, every week, every year. Somehow I like lost my stream. At least on my end I did. Okay, there we go. We're back again. All right, good. Please buy fair, sell FOMO. All right, be right back.
At 10:30 a.m. Eastern Time, we get our weekly EIA natural gas change. Forecast a build of 1 BCF on the prior build of 21 BCF. One minute remaining. Ten seconds. Draw 6 BCF, draw 6 BCF, lower than the expected build of 1 BCF. Seeing some upside in US natural gas. And we have posted the weekly EIA natural gas report on the feed for all those interested.
Just a couple quick notes here for you this morning. Coming into some supply above. You see that supply up there on Bookmap? Yeah, take that. Where am I at here? Work? Yeah, that works. Move that over. Take a look with me here on VIX 9 day. Things I just want you to take a peek at here. Yeah, let's watch this right here. Hold on, I gotta clean this shit up. We've got too much shit going on in here. It's so messy we don't do any cleaning. Whoa. Need to clean up after ourselves. It's like a fucking bear party or a bull party. No. Right there. Turn that one around right there. Got a couple things I got to look at here.
White House's Kirby says we have info that Iran attack could come with little warning.
I want to warn you all of something right now. I'm going to warn you guys out here right now, okay? You heard that right there, right? I'm going to warn you guys of something right now. Dude, what's going on here? Didn't I? I'm going to show you guys something here in the back. Come on now. Dude, what is going on here? It's like, do I have like somebody messing with my shit? Okay, right. You remember that whole thing, right? All right. Fairly simple, right? Dude, am I not clicking this or what the fuck is going on with this? Let me click it again. All right. Sorry. VIX 9 day, our old friend VIX 9 day. If you ever like trading volatility or you want to trade volatility, rip up VIX, rip up all the other VIX products. Just start looking at VIX 9 day, okay? This will make your life easier. Instead of trying to read tea leaves every day, start watching the VIX 9 day, okay? There's some other ways to look at VIX 9 day. You could do like, I think, SPX divided by VIX or VIX divided by SPX. Can't remember. And that would give you something similar. Shows you the up and down movements a little bit more cleanly over time. There's a few things we need to talk about here, okay? We're not there yet, but I want you to just be conscious of a few things here. Coming into the weekly trigger on VIX 9 day. If VIX breaks down in here and starts to swoop back up again, probably close to an intraday top. Not there yet, but just be conscious of it. Remember, you're buying the market up there and you're closing longs down here, right? So just be conscious of it. You're getting some warnings right now about Israel and Iran, right? And as we blast down here, it would be time, not right at the moment, but like this is a 1 minute now, so got it on a 1 minute basis. We're getting into that, just that little bit of maybe a ricochet bounce down here. Got the weekly target right there. Bam. Close the gap. Maybe keep on coming down. Just be conscious of where we're coming here, okay? Next thing I want you to be thinking about here is this. So that's your VIX 9 day. Boop. Right there. I'm going to snap a little chart for you here and put it in the Discord. So you get the gist. Believe that's VIX 9 day. Yeah, so there's VIX 9 day. So just as we swoop down in here, just be conscious of it. There could be a little bit of a bounce here. Then maybe further down, then the swing higher. I always like to come down inside, get it real nice and deep. You can probably take a look at some prior bottoms down here, what the market did down here, right, as it starts to turn around. There's some action in here, too, before we even get there. Just be conscious of it. It's not right now, but it's, it's like we're getting close, right? Closer. And always also see prior examples. Blast down into this weekly, bounce higher, then bounce down, get underneath it. Right? Bam, bam, blast through. All right, you get the gist. Now just keep your eyes on this VIX 9-day. There's a price target down there of 13.92 and then $10, 10.93. Now this is where my question comes in, okay? So we got like a price target of VIX 9-day of 13.92. The question then becomes, can we get VIX 9-day down to $11? Can we go to $11 on VIX 9-day? Big question mark. Why is it a big question mark? Why is it a big question mark? So we're going to look at that really quick. We're going to make a new layout. No, not load a layout. Create a new layout, and we're going to do MS for Martin Shkreli. We're going to do our boy Martin Shkreli. We're going to talk about TMF and TLT today, too. We're going to talk about TMF, TLT, CL, Martin Shkreli. Shkreli. It's a gorgeous chart. Look at that shit. Fucking bam, sideways, bam, move higher. Gorgeous SPY chart. I'm going to talk to you about something important here. So let me get rid of this volume. Let me get rid of this volume chart down here. I'm going to then add an indicator. Our boy Martin Shkreli. I can never pronounce his name right. He has an indicator called the Equity Risk Premium Indicator. Looks like 20 of you put it on yesterday. Good job. 20 of you put it on yesterday. Now, I don't know how to. There we go. Visibility, style, we're not going to do white. We're going to do yellow. Right there. We're going to make it's a line. The 0 line, we're going to make that white. Make that thick. Good. All right. Now, we're going to talk about a few things here. We're going to talk about two important things here. So we got an election, okay? Right in here. Hang tight one quick second. Right in here. At home, when you have your own time, I want you to look at the 2020 election. Right now, it's August 15th. We're on August 15th. That won't be an exact replica. Nothing really ever is. But on your own time, I want you to just look up election volatility. November 1 is where? Right there. Right there. Shocker. November 1st. And the reason I want you to look at this stuff is because macro hedge funds were the buyers of this bottom. Macro hedge funds were the buyers of this bottom. I don't know what you know about macro hedge funds. You should look them up, Google search what they are. And they typically trade geopolitical and political trades. They normally trade volatility surrounding, simplified, they trade volatility surrounding elections. So on your own time, now there's a couple things here to discuss. One would be that they love fucking trading political cycles, like an election cycle. Number two, they use equity risk premium as their gauge for when to buy dips and sell rips. If equity risk premium drops in an election cycle to a 0 line, or in this case, a 1.20 line, they're probably going to sell the market. They'll probably try to run this trade once, twice, or 3 times. And Rubner from GS has already stated, well, we got our first correction, but we're in the 8th inning. And I'm like, what does that mean? You're going to buy equity risk premium once or twice more? And when you get in these election seasons, there's more vol in price, right? Up, down, up, down, up, down. And then it ends on November 1st. It ends November 1st. Remember that date. Very important. And you can see in 2020, it ended on November 1st. And what I would not quite caution you, but I would say to you, as you see us bottom during election season, they will likely come out and want to buy that risk premium, sell that risk premium, buy that risk premium, sell that risk premium as we come into that time of year. So, here to go to this election season. Switch this up. Go all the way over there. And what can we see? Hey, look at these fucking guys. They're down here. And I bet these guys don't try to be rocket scientists. These guys aren't like, they're not out there. I know that you guys think they're rocket scientists. They don't. They just like simple shit like this. And they're just waiting for that equity risk premium to come flying back down again so they can trade it again and maybe even trade it again. And we're just getting into election season, right? We're in what? August 14th. We've got until, what did I say? October 30th, right? Way down there. So I would pay some attention at least. I would at least pay some attention as we come down to, I would say like 1.18, 1.16. So the market still has some more room to run higher. But you could probably set an alert. Hey, let's set an alert on this one, right? Add an alert maybe at 120, 130, 150. And as we make our way down in this equity risk premium, right now it's at 1.69, baby. 69 every time. So we're at 1.69 right now as we get down into, 1.50, 1.25. Maybe snap a few lines and just set some alerts in there. Because these guys are going to more than likely try to this trade at least once more, if not twice more, before we get to November 1. So as we make these highs in the marketplace in SPY, you may want to hedge. Now, there's some ramifications here. The first ramification is because of where we are, we should trigger other entities that should buy and stabilize the market. Okay? These are not macro hedge funds. These are just other entities, buyers in the market that should stabilize the market. So are we guaranteed that are we guaranteed that the market's going to go down in a meaningful way? No. Volatility, though, right? VIX volatility could spike even if the market doesn't go down in a meaningful way. You can express this trade through VIX. You can also express this trade through SPY put spreads. Maybe, if you're gonna be risky, you might be looking for an October expiry, right? On the month on OPEX for October or end of month, or you look farther out into November to capture the entire trade. Maybe it's a VIX trade, or maybe it's a put spread trade that's in the money. Maybe it's even just a put back ratio spread, right? So if we continue higher and trade 600, woo, your hedge paid for itself, and you made probably 3 to 5%. If the market rolls down at any point from here into November, you probably are going to get a fat print, right? So as we trade higher in this market, as this market is heading higher right now, right, you start thinking about some kind of a hedge. If we go up on a ratio spread, you're going to get paid. If we roll down at all into October, you're going to get paid. Make sense? This swings down, this swings back up. Now, we're not quite there yet, but we're getting close. So as we get closer, this will become more apparent to you. I'm going to introduce this concept to you before we get there. So I'm going to say it today, and in 2 fucking weeks, it's going to come true. Do you understand me? When I put these concepts out to you, it's not after the fact, it's before we get there. So I want you to pay very close attention to this risk premium as it drops. I also want you to relate it to wherever we are in price in the market. And then I want you to think about them trying to come around and fuck around again into October, at right around October 1st, and possibly even into November 1st. Okay? And you're like sitting there going, woo, baby, it's October 31st, and I'm making all this money on the downside, right? I'm a bear and I won. Woo, yeah. Or I'm a bull and I'm hedging my longs to the upside to 600. Okay, so even if we just come down, if we're going higher, just get that little bit of hedge going on in there. Does that make sense? So you're going to think about a few things here. Number one, it's not guaranteed. So maybe your ratio spread is better. Because if we have new flows coming in the market that can stabilize the market, and you might be better off buying volatility rather than hedging with a put spread. You might even do better with a ratio spread. You guys understand what I'm saying here? Please say you do. So think about this equity risk premium. As it comes down, these macro hedge funds are going to want to take this trade again. These guys are like big, fat, old white guys, and they're like, we only do this every 4 years. And they're going to run this trade on you. They're going to run it on you until October 31st, whether it works or not. They're here to run this trade on you, okay? Now, next thing on this trade that I want you to be aware of here, or not aware of, but is that the VIX 9-day is coming into a buy zone. It might take some time. You'll see it's like the VIX hit here, bounce up here, come down here. Not quite there yet, are we? Still got some more room to run down here. And these guys are going to be sharks down here watching the VIX, watching equity risk premium, right? And they're going to be like swimming sharks down there just waiting. And you're going to be all, fuck yeah, I'm just getting long right now, Cap. Like right in there. You're going to be getting long down there. They're going to be down there ready to capture your ass. Swing this thing higher again. And you're going to get caught. Next thing in all of this would be CL. CL is like, it's got like, I don't know if you guys know this, but like CL is like one of the most shorted things out there. Like oil is shorted to hell right now. Because it is shorted to hell right now, it has the opportunity to squeeze big time. You get that little mix of dropping down into the VIX 9-day, equity premium risk bottoming, shorts on CL, Israel, Iran. You start to add it all up, put it all together, and you go, oh boy, there's one of the most shorted shit out there right now, oil. and it just dipped. Nice cheap price. Got that. Look at this. I actually have an alert on this. See that? It's an alert that I have. I'm like, oh God, yeah, please send it down here so I can buy oil for a squeeze on some bullshit Israel-Iran news. And send CL rocketing. Understand what I'm saying? Oh yeah, oh yeah, oh yeah. Now I don't know if we can get above to $100 or 90. It might be too much of an ask to get to 90 or even 100. So does it explode? But something a little bit more rational. You can do this too with U.S. Oil stocks like Brent, WTI. You can express this trade in the U.S. stock market, not just futures. But like there's like an outside the money call probably you could take with enough time on it into, let's say, October 1 or November 1 on a massive squeeze for one day, maybe 2 days. So CL worth looking at to express that. Another way to express that trade. Next thing I want to talk to you about here is going to be TLT. We always talk about CLT. Whenever you get a chance to buy the TLT, right? You bam right there. Woohoo! Bam, coming back down again in that buy zone. Every time you see TLT right now getting hammered and clobbered. All right, no rate cuts, right? Rate cuts back on the table again, right? Just keep your eyes on this one to come down here as well. TMF is a triple leverage, not financial advice, but I love expressing that trade in TMF personally. And, then all of a sudden you get some bad news. They're telling you we're getting rate cuts again. And you can take that trade right in there. So keep an eye, set an alert on $95. Get the 95 right there. Maybe even 90 this time. Maybe we get a little bit lower this time. Set an alert on like $92, $90. Because right now they're saying no rate cut. Get another tag down there. Maybe you see it right there. Bam, bam. Maybe even, no. I said 90. I mean like $93. 95 and 93, set two alerts on TLT, and look for another face ripper on TLT. So there's a couple like trades here that you can take or express these trades in different ways. So right down in here, to set a little alert right down on like 95 and then 93 down here. Somewhere down there, if you can get a little bit more blood. Yeah, we're not getting rate cuts. Okay, now we are getting rate cuts. Hope we don't do that, though, right? Never rate cuts again. Jimmy Berry's over here going, yeah, we're never getting rate cuts. He's like, suckers. Bye-bye rate cuts. Duration, baby. All right. I bet you can add. I bet you can add that equity risk premium, and run that shit to whatever you're using out there in your own. Add that shit to your little pile of shit that you're using. That equity risk premium. It'll probably work until about October 31st or 28th or whatever. Write into that like right before November 1. And there's another note here too. It should be what? The expectation would be that you can buy the markets on November 1. No matter who's going to win that election, right around November 1, you can probably long this market straight into the end of the year. Fair chance of it if the market is down into November 1. If price action shows us that, dates can change, of course, but just watch that price action as we head into November 1 and that equity risk premium trade at least until November 1. I think Martin even wrote a note when he made that tool. That's the guy that everybody hates. I don't know if you guys know him. He's an old school Wall Street bettor. Old school, not old school, but a stock trader, or not even a stock trader, just He went to jail and stuff. He raised the price on a life-saving, I believe, diabetes drug. People hate him, but he's an old school Wall Street bettor, old school hedge fund guy, and he's getting older now, right? He's got to be mid-30s now, maybe early 40s. He made that indicator for people for election season.
To settle on
So if
August
you're looking for election season volatility, if you're looking for a bear market, any of that kind of stuff, it's an indicator of danger ahead. Especially in certain climates.
The U.S. to
Like you need to pair it with like a climate. So if you're like, I don't know how to explain it better, but
to settle on August 30th. The U.S. to sell $16 billion 20-year bonds on August 21st to settle on September 3rd.
All right, cool. You guys get what I'm saying here? Right on. I can't believe I'm pumping Martin's Kelly. Right there, right in there, right in there. That over for you so you can see it. Right there, perfect. Yeah, 100%, Jimmy. Oh, yeah, that's the guy I'm talking about. That's the guy I'm talking about, Winky. I'm talking about the guy. That's the guy, dude. That's him. That's actually him, too. That's his TradingView account. Let me see if I can post the... I posted the link last night. I posted the link to the actual... the name of the indicator is the equity risk... It's called the Equity Risk Premium Indicator. You can search it up. I think last night, like at least 20 people got the indicator. He made it free for, here's TMF, man. Want that? See that TMF come down? TMF trade like $53. Triple leveraged TLT. Party bus, cocaine party bus. Didn't I already talk about PayPal? I think I went at length about PayPal at one point. He's still an active YouTuber. I used to know him when he was on Wall Street Bets many moons ago. I'm not friends with him, though. I'll say that. I'm not his friend. I don't know if he was in Vegas Bets or not. I can't recall if he was in Vegas Bets or not. Skrelly loves baby seals on vacation. Yeah, he got he's the guy with the Wu-Tang album. He's the guy with the diabetes drug. He's the guy that should have just been quiet and he got too loud. What he does is not anything that's abnormal. He just went public and said, fuck you. That's abnormal. He shouldn't do that. That shit happens all day long. But he got in the face of like the Senate and was like, you can eat a bag of dicks. And of course they were like, well, shit, you're under the microscope now. You go to prison one way or another. Yeah, he's a farmer, bro. He's a farmer, bro. They all do it. They just don't brag about it. He bragged about it. He's a little polarizing. It was pretty bad what he did. Pretty filthy. No, I haven't watched Industry. Is that good? What's it about? Ooh, I got to watch that. Haven't watched it. Industry is a British American television series, drama series. Thanks, mate. That's all he's got to say. Mate. Premiered in 2020. The show follows a group of young graduates competing for permanent positions at Pearpoint and Company, a prestigious investment bank in London. Oh yeah, I got to watch that. They say all the finance bros are like the coolest guys right now, right? It's the summer of dating finance bros or something. Is that real, I guess? It's really good. Oh, sweet. I got to watch it. I don't have any shows I'm watching. I tried starting. I don't watch any TV shows right now. I wrapped up watching whatever the Game of Thrones show is. I watched that thing. Watched it all at once, basically. It was okay. I'm assuming that I needed to read the book for that one, which I haven't. I did start whatever that Apple show is, For All Mankind. I tried to watch episode 1. Apple is weird, man. They got weird shit. Apple is like elevator. I feel like I'm in an elevator. I'm in like an old school mall at like JCPenney's or something. It's like everything is safe on Apple. It's like, I don't know what set that's for. It's like the mom set or something. I don't know. Like not in my backyard Democratic mom set, maybe. See how edgy that was, bro? I'm like, no. No, I didn't see it. Foundation is really the best shit on Apple. I like that book series, by the way. I didn't know that show was that good. I'll have to check it out. I've heard Severance is good. I've heard Severance was good. I watched part of Severance. It was okay. Elevator to me. No, is it Severance? Yeah, Severance. I think I got bored with it. Nah. It's like for the office set or something. Like if you work in an office your whole life, it's probably for them. I can't get past like the cleanliness of Apple. I read the entire Silo book series and I read the entire thing because everybody said it was great. I thought it was boring. I thought Silo was boring. Claimed to be the best. You know what it reminds me of? I watched the 10-cent 3-body problem. I thought that show was great. I hated the American adaptation of it. Couldn't stand 3-body problem, the U.S. version. It was atrocious. The 10 Cent was closer to the books with S. Or at least the first season was closest to the first book. Oh, Loot. I haven't seen that either. I'll check those shows out, though. I'm definitely checking out this finance show, whatever it's called here. Industry. Yeah, people like Severance. I know that for sure. People love it. I've heard that people say that's the best show they've ever put out. The Silo books were okay. I just always felt like, so when I read Silo, right, I always felt like I got mystery boxed, left hanging on my seat, and then the reveal each time was like, haha, here's the reveal, but is it real or not? And I'm like, oh, God, here we go. I got to go to the next book. Trying to think of my favorite shows I've watched of recent or of late. Favorite shows. Not many. Yeah, I was watching I watched this one guy on YouTube. He talks about writing in shows and stuff. He's like on this old George R.R. Martin thing where And it's kind of like movies too, right? If you like adjust for inflate, like so when people are like, well, you're just old, and I'm like, no. So when I was a kid, I was probably the last generation of kids where TV shows were an event. Like everybody showed up to watch a show. Movies were an event. Everybody checked the newspaper. When I was really young, people would check the newspaper, and every Friday or Thursday or whatever, Wednesday, Thursday, they would come out with the movies for the weekend. And it was an event. Everybody went to go see a movie. Everybody had TV shows. That was your form of entertainment. And it sucks today because the industry doesn't really want to say to you that content that we consume is changing. Generally, it's changing. And then when you adjust for inflation and the human population growth and markets, what that content is and how good it is and how good it's received changes as well. So you have like the newest Wolverine movie and Deadpool movie. My oldest daughter watched it and said, they Disneyified it, Daddy. And I was like, really? And she's like, yeah, it's definitely been Disneyified. But there's also like the audience that it's meant for is not just you. It's meant for a world audience. Places where something that might be too racy for them isn't for you. So it's like consumption around the world. So although they might have more worldwide sales, they don't have the same U.S. sales adjusted for population growth, inflation, all that kind of stuff. So for me, at least, it's hard for me. I realize if you're younger, you're used to that content. You're like, hey, this is great. For me, I'm like, oh, that shit sucks. I'm like, the writing sucks. They don't have the right writers in the room. The DOP, whoever the DOP is not putting together a coherent story. And there's a lot more of like, here's a 5-minute skit. Here's a 5-minute skit. Not really an intertwined story that that takes time to unfold, right? Because you're like only paying attention for small periods of bursts of attention span. And we also have some of our best writers and best story crafters and actors and doing other work today. Instead of working in the Hollywood machine, they're producing shit on YouTube. Like some of the people that are on YouTube right now are insane. Their backgrounds, the production value, the research, all the stuff that's going into what they're producing is the quality of what a TV show quality would be back in the day. That guy, Ryan Macbeth, he's on YouTube. I've been watching more of him. I was afraid that he was like a CIA guy or something like that. Guy's putting out quality shit. And you're like, why is this guy not on CNN or Fox News? But he would have been 10 years ago or 20 years ago. People like that would have been on TV or cable news or wherever a long, long time ago. And that's not today, right? All these Hollywood people are branching off and doing other things. They're doing games, right? They do games today, game development. They do YouTube, TikTok, content creation, Twitch, all that kind of stuff. So content's shifting. The quality of content's shifting. Who the audience is shifting. All that kind of stuff. So TV shows, movies today, for me, I have some of it's good, some of it's hit and miss. A lot of it is just content. This one guy was talking this week about how they're shifting from art to content. Shit fulfill for you to consume. And not necessarily, hey, this is the high point of a horror movie or a high point of drama or whatever. So mixed bag on that kind of stuff. I don't know if you guys notice it. I think if you're younger, you don't notice it as much as if you're older or if you're in the industry. And what really sucks about it is you can't get people in the industry to admit to it because they're never going to. They're going to tell you, no, it's better it's ever been. Best it's ever been. And we kind of like jumped the shark too, right? Because there was like a practical versus CGI, or there was practical effects and there was CGI. This encompasses all of it. Like there was like a zenith, like Jurassic Park, basically, where you have the intertwining of practical and CGI, and now everything's fucking CGI, right? It's like, fuck practical. We ain't even do it. It's too expensive. Like just doing CGI now, right? So it's like all trash. You're just like, ah, fuck. And when I was young, we were hoping for that. When we were young, the hope was Woo, we're getting CGI, and now we're going to be able to mix a real car chase with real cars with CGI, and it's going to be epic. And you're like watching Jurassic Park going, this is going to get insane, right? All these worlds we want to see, all these like concepts we want to see in real life, and books that we want to see come to life. Some of it today is kind of like, it didn't really quite meet the expectation level that we had then. But I don't know if kids care. If you are used to pumping your own gas, then you don't know what it was like to have someone pump your gas or check your windshield fluid or change your oil or check your oil in a gas station, right? Same with shopping. Same with online shop. All these different things. Some of them is better. Like I do like online shopping the best. But some things have changed for the worse too, right? I was on Reddit the other day looking for my kids for clothing for school, and oh yeah, squeeze it up there, baby. And Reddit was like, you can't really go to thrift stores anymore. It gets picked clean, resold on the internet. A lot of the stuff that goes to resale stores today too is throwaway fashion, so it's not even quality stuff. And people are like, I do better looking for school clothes, bargain shopping on the internet. Like I find, they're like, we did this thing where we looked all this stuff up, and they were like, well, you should go to like YouTube and go to your TikTok or whatever, and you find out what every teenager should own, right? Or every young man should have a black suit, right? Or a gray or a dark blue suit. You start there, and then you build out your closet, right? But then you don't go to seek it out in a store anymore. You like find the brand, the type, the fit, and then you go on the internet and you look for that suit either on eBay or on Craigslist or Facebook Marketplace, or a reseller, or an actual reseller like Gear Trade or something like that. It's just fascinating how things change over time. Sometimes for the better, sometimes for the worse. What's this show called? Don't Hug Me. What show is that? Pesky? Podcast popping in. He's saying, yeah, dude, I know Wesley Snipes was in it. I haven't seen it yet, but I saw the pictures of Wesley Snipes. Can't wait to see that either, Winky. Trader Podcast saying that if we go to 55.30 and 55.40, you want to see it right here? Let's go talk about what Trader Podcast is saying inside the Discord right now. So, Trader Podcast is talking about squeezing right now up to 5,500. It says game on for a chase and squeeze for another 20 points. So if you've got the gamma picture inside here, local resistance is now at 5,500. Local support is now at 5,500. And you can see we're squeezing up there right now, right? See it right here for you. And there's your local resistance right in there. And if you pay close attention to our main screen right here, there's your 5,500 bar right about there. And this in here is your last little bit right in here. This little zone right here is your 5,500. Right in here. This is your RTX intraday sell signal. These two, this is zone right here as we come into 5,500. Now, the point that Trader Podcast is making, we're going to jump back over here, is telling you that if we break into right about there. Did I get that right? Let me see if I get that right, brother. 540. Right about there. 540, 530.
At
Right
11:30 a.m. Eastern Time, the US sells $95 billion in
there.
4-week
Right
build.
about there.
Prior high yield 5.285% and a prior bid cover of 2.77.
If we can get over this hump right here and not reject, you can get above. We're going to have a squeeze right here to jump over this 5,500 right here. Translates into, I believe, something like this. Wait, right there. Put that right there. If we consolidate in here, be able to squeeze up right in there. Thanks, Trader Podcast. We'll take another look at how that plays itself out. Please tell me this works. Please. God damn it. It's not showing on my screen again. Why does this fucking thing not show on my screen? I did the live stream yesterday and it showed no problem. Why is this not? Let's see here. Hold on a second, guys. Add a source. Display capture. Add source. No. Use new source. Add source. No, not that one. Cancel. No, not that source. Trash that one. Add this source. No. Add source. Add new source. Display screen capture. How about screen capture? Dude, no, don't do this. No. Hold on, guys. Screen capture. Add source. No. Add new source. Screen capture. Right there. Oh, yeah. There we go. Can you guys see all that? Oh, yeah, you can see that. Okay. So let's see what he's talking about here. We're trading right now 5530, right? So 5530 is right here. What he's saying to you is that if we can get above this 5530, could be one more slam higher to. Holy shit. No, wait a minute. I'm in the wrong. That's wrong. Oh, my bad. I'm getting a little too ahead of myself here. We're right here. That's where we are. Right about there. And if we can get past this bar right here, see that bar right there? We can get past that bar right there. We will trade possibly that bar right there. And that is 5550. See it? So like right in here. We're right on that bar right there. Can you guys all see that out there? So I'm gonna bring this. Can I make this bigger? I guess not. No. Yes. Yeah, I guess not. I guess it's harder to get this into where I want it to be. At any rate, we are right above, 5530, 5530, 5540. to get to that last little bar right there. There ain't shit in here, is there? There's no gamma hot stopping us from going up there, is it? No gamma stopping us from going up in there.
At 11:30 a.m. Eastern Time, the US sells
Uh-oh.
$95 billion in 4-week bills, prior high yield 5.285%, and a prior bid to cover of 2.77.
Got the Euro close coming up. $5.40 right there. I'll make this bigger. Make this bigger for you. On a 30-minute basis. Oh, yeah, this is going to be the top right here. We're coming into the top right. Not the top just exactly yet, but we're peaking out on hourly velo right now. Coming into the top here. Right there. Watch that real close. There's the 5-minute trigger down there. Let's take a look at the 30-minute. Oh, yeah, SPY's got some more it can do. SPY can crank out a little bit more. SPY's got a little bit more juice left in it in velocity. It's got more. Can hit one more. We got one more push. One more push is possible here. Right there. It's going to be a big ask, but time is that? Like 1:30 in the afternoon? Where's like 1:30? All right. All right. Maybe something more like that. Bam, bam, bam. So we can get up there and do it. Gives enough time, right? It's 11:30 right now. Give you 2 hours to get up there. Hourly and half hour is racing higher right now. Hourly half hour racing up.
Shortly expecting the results of the 4-week bill auction, I'll lead with the high yield.
Does that work? I hope that works for you. You put that over there. Price. Does that work like that? Something like that. Red Rabbit wants off the ride. Red Rabbit's like, I don't want to do this, and then that Cap. Red Rabbit's like, get me out of here, I'm done. You're excited for Daredevil? Right on. I'm trying to go back and read right now. Hold on. Let me see what you guys are saying here. Depends on where you are. I do very, very well shopping for myself. My daughter Vintage Thrift just went on Tuesday. We hit over a dozen stores. Spent $250 on 2 trash bags full of clothing. Hell yeah. That's rad. So I guess it does depend on where you live, huh, Metamorph? Jewelry, accessories that my 13-year-old was thrilled about. That left over more money to buy expensive makeup, skincare, etc. at Ulta and B&B, and she was also thrilled about. My kids like Ulta, B&B. What's the other one? They like Five Below. I think my kids love Five Below, too. They like hitting that store. Can't stop watching Seinfeld. I'm hoping Gambit gets some more love now, too. The change from film to digital changed everything. Only 20 years ago, he looked like a badass. I'm glad that... Did you guys see the... I thought... do you guys think that... what's his face? Hugh Jackman is definitely jacked on steroids, or no? I saw the picture of the before and after. That when he first played Wolverine and now when he's playing Wolverine, he looks younger.
5-spot 2.
Or do you think that's CGI? Or do you think that's maybe implants? Or no?
9, 2-spot 9.
We were at the mall this week and we heard people talking about how they steal shit from Lulu and then return it for money. And then they go to Athleta and buy clothes. I was like, damn, man, there's a whole economy around stealing shit. Woof. God damn. Is there really? Yeah, 100% on that too, Winky. Yeah, they are running out of time, aren't they? Did you get to see Trader Podcast's seasonality chart? There were some Sunday scaries in that chart. I was like, oh shit, we're running out of time. It's the first thing that came to my mind. I looked at his chart and I was like, they're trying to scare us with that other move, that downside move. Not Trader Podcast, just the market is trying to scare us. Did you see TPC's? Ask him to post it again. It was a really good seasonality chart. It was really good because you can see like the we're not going to go here, we're not going to go there. The Elliott Wave is switched a little bit. It's like Elliott Wave right now has us trading. Elliott Wave, I showed it to you guys the other day, right? Like Elliott Wave has us now trading direct to 600 early. And then rolling down later into like November 1, I think, and February, mid-February, for 2 new lows from this correction. It's like this correction, we should see 2 new lows, but one of them is after 600, and I believe it's in mid-November, and then the other one is February, like a mad dash to the top. Any of you guys, Elliott Wave practitioners out there? Anybody in the chat or the stream? Twitch, YouTube, any Elliott Wave people out there? You guys noticing that too or no?
With Financial Juice Pro, now only $99 a year for our real-time.
You're saying Hugh Jackman's natty? I can't tell. I looked at the old picture of Hugh Jackman and the new picture, and I'm like, man, he looks like he has implants. For his age, he looks like he's got some implants on his body. Like they do like these little chicken cutlets where it makes you look younger, like firms you up. He's Hugh Ackman. Any LA Wave guys out there, gals? Anybody practices LA Wave? No? A little Anavar never hurts. I don't think anyone's natty anymore, personally. Even if you say he's natty, I know they're not. There's no way they are. And they were talking about that on the new Game of Thrones show. There was like I notice this all the time in TV and movies. England does a really good job of casting. Like, if you watch like British TV and movies, they do an outstanding job of casting people that you would think you would meet on the street. Hollywood's terrible at it. They were talking about this female pirate, and they were like, look at her teeth. You can see like they're all perfect, and she has fillers and all that kind of stuff. And I'm like, it's glaring. You can see it all the movies and TVs, shows from America. Everyone's teeth are perfect. You can tell they have worked. It's like that fake plastic tree Hollywood look. It's like a very unique. If you've ever lived in Hollywood, you'll see it. I used to live near Hollywood, and you saw it. Everybody looked the same. Like everybody had the same work done. They all had that look, that Hollywood look, and you don't see it. Like ugly people are not often on TV or movies anymore. I shouldn't say ugly, but like Dustin Hoffman, right? He's not really the best looking guy out there, right? Even a perceived ugly person still has work done. You can see that there's like work. No, they aren't. They're not looking for a wave down. Unless maybe they're Bear Elliott waivers. The Elliott waivers are looking for a straight shot to 600 that I know. Trust me, bro, I'm natty. Just a protein shake, bro. That's Fire Terror Wolf. Yeah, I think the workouts are real. I don't think the workouts are not real. I just think that like the cost, time, money, energy, the strength. Like when you go through a workout cycle, I don't know if you've never been through like not a drug cycle. If you've ever been through like a workout cycle, it's fucking brutal. It's absolutely, if you do a real one, it's brutal. And you like do enough of those through life and you get to be like 40, 50 years old, you're literally going to break down. Like your body is going to break down in those cycles. And there's like a window that you look that good. It's like a 9-week, 12-week cycle that you go through, and it's insanely hard. And then there's only this very small window that you look good, and then you lose it all. Like you literally come out of that training cycle, and about 20, 30 weeks later, you're back to flab, or you might not, or you think you look like flab. Other people think you look normal and good, but that like peak of a training cycle, all athletes would do it, right? You go like do marathons and stuff, or they compete professionally, not baseball. That's why you see like a lot of athletes that play like football or something. They're in fucking wheelchairs, right? At some point. So it's not just getting hit. It's the training that is brutal on joints and your body in general. There we go. We got some LA Wave guys. We've got some LA Wave guys in here. Are you guys doing bear counts or bull counts right now? Clear the Ground is talking right now. I want to hear him because probably saying, Cap, how about we're in an extended flat correction on our way up into B near all-time highs before C back down? It's possible. I see the near all-time highs, but I think we get one more wave higher to 600, and then we get the two down waves to the low we were just in. So we do the all-time highs, but that's the same wave. That this wave up should get like near all-time highs, or I guess you know what I would say to you? clear the ground would be it's going to matter if we fail all-time highs or not, right? If we get the all-time high, that would be a larger wave higher, right, to 600. If we fail to get the all-time high, I would say yes, you're correct. I think we have to wait for it, don't we? You think we have to wait to see maybe if we fail the all-time high or not? Clear the ground. I'm talking directly to you because you know what you're talking about. I can see. Where's he at? I got to find him in the chat. Yeah, I'm with you on that. Clear the ground. I'm with you on that. I would want to see the same, right? I would agree with you that if we don't make the all-time high, 100%. But things did. Would you agree that things changed in this correction? I think that they did. I got out my rate the moment we went down. The moment we got the first of the two drops. The first one we lost, I was like, fuck. The second extension down, I was like, that's just fucking just drama. It's like that first I called it the doom line here in the show. We got back to it, of course, today, I think, or yesterday. But that first gap down was when I was like, oh shit. We are super fucked. Or not super fucked, but the whole landscape has changed there. Yeah, I'm no expert either. It's not what I do. I try to keep up on it. That's as good as I get at it. That was the trap. Like, the trap was, I don't know if I call it a trap, but in my view, everything changed on the drop right here. That drop right there. Bam. Once we went down there, it was on. Straight down. Right about here. Not so much here, not so much down here. Was it that one? Yeah, I think it was that. I think it was that one. I think it was that drop right there. Everything changed for me right at 54.15. Losing that changed for me the outcome on the year. That was a big move right there. I could be wrong, of course, but hot damn, dude. We are in a supportive environment. I don't know if you know what that means. We grind higher. Just to give you a warning out there, we are in a supportive market environment. They're going to buy every fucking dip until we get to resistance. They're going to buy until we get to real resistance. Crazy. We are in a supportive environment. If you are a member or supporter, you're going to expect every retest of the hourly trigger to hold. And checkbacks on the daily trigger. You're going to expect those to hold when we go back down. Pretty good. Good job, Bulls. Not unless those are lost do we get bearish again. Holy shit. Congrats, Bulls. Motivation Healing's like, I fucking hate Bulls. I hate FOMO buyers. Can't stand them. I hate them worse than the Doomer Bears. No, maybe not worse. They're always like, woo! I'm like, oh, God, here we go. All-time highs, baby. I always do better and I buy the dip. I hate the grind. I always like the doom and gloom. I like hanging out with the doomers. Yeah, 100% Winky. 100%, brother. I think they use drugs, though. I think they use I think they have really good doctors. I think they have really good. My wife is if you guys don't know that out there, my wife is an athletic trainer. Not the Cracker Jack kind. She's got an actual degree and degrees in it from real accredited schools. So she's in kinesiology, which kinesiology is sports medicine. So it's like a physical therapist for athletes. And she used to be in professional sports. As a matter of fact, she was. You guys ready for something cool? A little cool tidbit. So she was in. She would travel with sports teams, and she did. Talk about a wife, right? That you can't be jealous of. Not an easy person. Like you have a hot wife that's an athletic trainer for professional athletic teams. Not easy. You have to definitely not be the jealous type. The jealous type of a jealous man. You have to be confident in yourself, or you'll go gray early and pull all your hair out. But she worked for professional sports for a long time, and one of her athletes was Brian Urlacher, famously enough. I don't know if you know who he is, but I think he's the all-time greatest defensive end, maybe, of all time, maybe? Something like that. You guys know who Brian Urlacher is? I don't talk about her much on the show. At any rate, that's her profession. I'm telling you, these guys are not only the best doctors, but they got like the training regime, the food regime, but then they got people that are minders, like literal minders, like people that walk around with you all day long and make sure you're doing what you're supposed to be doing. I shit you not. Yeah, Brian Urlacher, dude. 100% fucking guy's beast. Yeah, 100% Jacob. 100% dude. And these guys, they put cutlets in, like these chicken cutlets and stuff, and then like they do drugs. Of course they do drugs. There's like no way you're gonna recover. There's no fucking way. Boot Barn just crossed 140. Like Winky's favorite stock. Fucking Boot Barn. Every time he brings up Boot Barn, I'm like, God damn you, Boot Barn. Jesus Christ. Winky's been talking about Boot Barn for like fucking 3 straight years. He like formulated the Boot Barn plan like when did you formulate that plan, Winky? That shit was they've been doing that. They've been formulating the Boot Barn shit for like the Grandmaster Boot Barn plan for at least 2 or 3 years, right? Well, you went down the whole entire thing with me. Winky probably spent like a half an hour talking about Boot Barn. Yeah, you bought it for $18. I remember you went down the whole rabbit hole on it. He says he's up 700% right now. It's fucking insanity, bro. Yeah, Urlacher was a linebacker for the Bears. The all-time greatest, one of the all-time greatest of all time, period. Oh, my God. 552, baby. 550. This is what I got targeted right here for today was 552. 552.26 is the target today from the brief last night. Anything above it is just gravy. That's my top tick right there. 552.23. Coming into it right now. Yeah, I think it was 2020, right, man? It was a long time ago we talked about Boot Barn. That was one of our first conversations, dude. Like Boot Barn was we deep dived Boot Barn. You went through the whole entire like trade on COVID and after COVID and recession and why Boot Barn would come out, and then their growth story. At that time they only had what, maybe 30 stores or something. 20 stores. I remember you were talking about the expansion and growth, like 40, 60, 70, 100 stores. Like you had the deep dive on that fucking company, dude. 100%. Oh, the S&P 5,000 articles are coming out right now. I was like a little weirded out. Yes, it's like yesterday. So I posted a link to a garbage Yahoo article, but it had really good data in the article. I posted this in the Discord or in the market brief last night. The article was garbage, but it was a good article. Like Yahoo articles kind of suck these days. They had some really good facts inside of the article, because about a week ago I had said we'd gone down, I think 6%, and we were like, yeah, we could go down to 9%, like 6 to 9%. But you buy that corrective move, and I think I showed you 5 corrective moves, the past 5 or 6 corrective moves. And I was like, if you had bought the last 5, you'd be up like 15 to 20%. Like even if this time was different, you would still be served well taking that trade every time. Your win rate is going to be insane-o, right? Even if this one was fake, your win rate would still be insane-o, right? Like the this time is different argument doesn't work. You buy that dip over and over and over and over and over and over, even in a bear market, like literally even in a bear market. If you go down that many percentage points, you buy that dip. And then yesterday, the night before, or maybe yesterday, I read an article of one of these investment firms saying, don't buy the dip, or you shouldn't have bought the dip. And I was like, what the fuck is this guy saying? This guy's out of his fucking skull. I was like, this guy's asking for he was trying to make the argument for a, like a trade that's like a winner like 7% of the time or something, 9% of the time. And so then yesterday I saw that Yahoo piece, and they backed up my assertion a week ago. And they gave the real numbers, and they're insane. Like, if you look at that Yahoo article, it talks about from like the last 10 years, if you buy that 6 to 9% correction, if you done that the last 10 years, like 85% of the time, you're going to get a 15 to 19% 12-month percentage gain. That's dude, if you're an 85% trader, you're more than Hall of Fame. You're like greatest of all time trader. So whenever you see those corrective moves that are, especially the outsized ones that are like, bam, we're going down 9%. You're not quite all in, but you're in with some size. Even if you just waited for those. If you just waited for a 9% corrective move, 6 to 9% corrective move, and that's all you traded. That's it. You miss all the runs, all the other stupid shit. You just wait for one of those, you'd win 85% of the time. A 20% move. That's insane. And you leverage it with options? Fucking stupid. You'll keep selling a little bit here and there as it goes up, and it just keeps going up. There will be a hell of a short on that shit once one earnings in the future. Let's talk about that, Winky. So let's talk about something else right now. I'm going to ask you guys, I said it earlier in the show, but I'm going to ask you seriously. Go and read the ISM report from Wolf Street on manufacturing and services, right? And then I want you to look at CPI report from him, and now the retail sales report that comes out from him. And it kind of guides you, and especially another key point here would be to be reading the entire year's reports and guidance from Walmart. And you start putting those like 4 things together, and it starts to piece together what to expect in 25 and 26. So if you're looking for like, hey, what do we think is going to happen in 25, 26? Like those things right there have some real insight. Like some real straight up insight into the next couple of years. What's really fascinating too is I was reading the CPI report, and even though prices have gone up, or the advertised prices have gone up, people aren't buying that shit. They're not buying it. They're just like, fuck you, no, I ain't doing it. So they just like sit there with that price. It's like you might think that rent has gone through the moon, but it hasn't. Like the ask has gone up, but the actual vacancy fills are lower. So there's like this fake. I was talking about it with you on the show the other day. I said that I told you that my oldest was going on vacation. My youngest intern wanted to go to a concert. So my youngest daughter wanted to go to a an ex-Disney personality that became a singer. And she's like, like all these Disney kids, they like become singers, right? They like do their show, TV show, and then they go off and try to extend their fame, usually with acting or music, right? Become a movie star or become a singer. This one girl, she's like in her early 20s, maybe early mid-20s. She still caters to a younger audience, and more specifically to like a preteen audience. It's like these teens are going to become teens in the next 3 to 5 years, and these young girls are like 11, 12, 13.
Shortly expecting the Freddie Mac.
They find this girl edgy. Like she does all the edgy music, right? Like, I'm a bad girl. Oh yeah, I'm bad. Aren't you good? You want to be bad? When you hit 16, you're going to become a bad girl. Like 11, 12, 13-year-olds like, yeah, I'm bad. I'm going to be bad. I see all the older girls be bad. I'm going to be bad just like them, right? So they like play on this with these kids. And these kids have disposable income. If you ask Bork, you're going to speak to Bork, he's in games, right? Bork's like, he's like, there's like 2 purse strings. Men, like middle-class men, believe it or not, are fine with losing their money. Stock market, right? I make the decisions. But kids are the other one. The kids, man, have huge disposable income. So I want to let you know here that I want you to know that this is my target. Right here. We're done. Anything above is gravy. So anyways, this went through it with the older daughter, and now I got the younger daughter, and she's going through it. And a lot of the reports right now are showing that, I think Winky was talking about this in the Discord earlier too. What a lot of the reports are showing is the ask is too high. Right? So I think Winky might have said cheeseburger or McDonald's or something. And we talked about McDonald's the last ER for them, right? So when we use a cheeseburger as an example. So we went into the McDonald's report, And I had said to you, I was like, you know,
US 30-year fixed rate mortgages, 6.49% August 15th week versus 6.47% in the prior week.
you have $1 hamburger. You ask for 2. You say, look, inflation's rising. Okay, $2. Okay, now it's 3. Well, it's not just inflation, but I get some PPI, producer costs. The hamburger itself now costs me too much money. Rates are high. Rates like, okay, $3. Okay, I'll pay the $3. I'm like, how about 4? How about 5? How about 6? I'm going to shut the dining room down. Eventually you're like, will you pay $10 for a hamburger? Right? And you're like, boy, there's a Culver's up the street. I can get a $5 hamburger that's better quality, hot, fresh, perfect. Maybe I'll try them out more. They used to be the expensive hamburger place. And their hamburgers are a little bit better than yours. Matter of fact, not even just a little bit better than yours. They're better than some restaurant, sit-down restaurant hamburgers. So McDonald's, let's say, as an example, is asking $10 for a hamburger. There's a window where 2 things happen. 1, your money is going somewhere else. 2, they're still asking $10 for a hamburger. And 3 is you're opening up market share to me maybe becoming more loyal to a Culver's. Now, within that, too, there's a whole bunch of other information. So my daughter is wanting to go to this concert, and my daughter's like, hey, I want to go with 3 of my friends. And I was like, cool. What about their moms? She's like, yeah, they'd like to go, too. I'm like, yeah, I don't want to go with, I'm not going to bring 3 girls to a girls' concert. I do, but I'm not going to, and not for that ticket price. And so I was like, okay, I'll send the 3 women, 3 moms. I'll send 3 kids, and all have a blast. Out the gate, getting 6 to 8 tickets to this concert for preteens was $6,000, I think. It was like $6 grand, $6 to $7 grand with all the fees and everything together. I was like, that's fucking obscene. We haven't bought clothes, makeup, hotel room, transportation, swag, nothing. That's obscene. Whether I pay it or they pay it, it's still obscene. The ask. You see concerts being canceled right now, right? They're canceling major B&A performers. Concerts are being canceled around the country and the world right now. Burning Man. Wifey brought up today, Burning Man is reopening their ticket sales. I posted it on Twitter, the discussion in our music about it. Now, some of that Burning Man has to do with aging out. No new tech bro. We're picking up Burning Man torch, that kind of stuff. But a lot of it is the cost associated with attending those things. I went to an EDM concert this summer. It cost me thousands of dollars to go to this thing. I got VIP shit for my wife, some friends. We bought a bunch of clothes. We went out to eat. We went there. It's called a ride share shit. You name it. It was just like cash, food, cash, booze, money, Lyft, money. You just name it. Boom, 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 boom. Thousands of dollars later. And that wasn't even Burning Man. Burning Man, I would assume right now, if you're going to go with maybe your girlfriend or your boyfriend and maybe a couple other friends, probably at the end of when it's start to finish, probably going to cost you 30, 50 grand easy. 20,000. No problem. No problem. Yeah, that's going cheap. Go doing it the right way. 30, 40, 50, 100K easy spent on a group of 4 people. That's a lot of money. That's a lot of money. You got to be making $200,000-$300,000 a year to be fronting that. No kids. You can't be married with children. Can't have responsibilities and houses and insurance and cars and all this other shit you got to pay. So where are they spending their money? If they're starting to say, well, fuck you, I ain't going to that, or I'm going to go to a regional burn, or I'm going to go to a Culver's, it's not that they're not spending their money. Where are they going to spend their money? Where will they spend their money in the coming year or two? How do you price that in? You can't just go out there and buy McDonald's unless they drop their prices, right? There's some places you don't want to be buying, right? Some of these companies that are perceived as recession trades may not be recession trades just yet. Some of them likely are. Some stocks have been taken to the woodshed and need to be priced in for that 25, 26, where that money is going. And that's some of that's happening right now. You can actually see it in our markets where they are. Like Walmart is a great example of that. Their March, or is it May 16th ER, they expect huge sales next year. They priced some of that in. They went from 50, I think, to 60, 65 or something on the gap up. They came right back down underneath. They're 50 MA, I think. And I was looking, and then today they grabbed it again at $65. They bought it this morning because they have not priced in Walmart. Maybe having blowout earnings next year after, right? So they're going to price that in now. And if they have blowout earnings, you'll see even higher highs on Walmart. They took Lowe's and Home Depot to the cleaners. So if you can find any of these companies that have not participated in the overvaluation trade on expensive hamburgers, and you can find them cheap, you rotate into those companies for the 2025, 2026 trade. Does that make any sense to you guys out there? So look for companies. You're thinking to yourself now, hey, if they're going to price in 25 and 26, right? FY25, FY26, you're going to be looking for any companies that are perceived to be cheaper, and you have the herd money of these people that are saying, well, fuck you, I'm not going to Burning Man. Fuck you, I'm not going to the Disney princess shit. Fuck you, I'm not spending that money on an overpriced hamburger. Where am I going to spend my money? You got to find those companies that these people are going to spend their money at and find out, are they on a low, so that you can buy into them so that they have not doorbuster earnings in 25, 26, FY 25, 26. Even if the market is burning, there's probably some safe haven-ish there for these two upcoming years. And you can see it in housing too. Wall Street did a real neat thing about housing and how like the rents are going up, but they're not getting filled. I look at Zillow, and they're the same houses. You can see them. They've been on there for like months and months and months and months and months. And they're like, we want $3,000, we want $10,000, we want $15,000, we want $12,000, $8,000. And they've been vacant for like a year. Nobody's renting them. They're just sitting. So you think they're real, but they're not. They're fake. People are choosing not to rent those homes and those apartments. You think that they are, but they're not. They're just. It's like the what do they call the businesses that are fake? Like ghosts. Like the companies that are not real. There's nobody there. You knock on the door, and there's no one actually there. Those companies that's happening in in housing right now. What did any Constant say? Oh God. I don't think that's a bad trade. I like the idea of owning Vol here. I don't think that's a bad trade. It's a little early, but I think it's still a good trade. Oh yeah, baby. VIX 9-day ramping right now. Right on spicy McHaggis. I think it's a good. I don't think it's a bad idea to be owning Vol here. I think it's a good idea. He might be a little early, but it's not an unreasonable trade. He's probably going to be right in a few weeks. I like owning Vol here. He's a little early, but I'm early buying calls. I get early. I get excited about buying calls. I can understand that. I buy calls early all the time. You guys see me all the time. Like, we're like this. You guys are like, wait for the you guys are like, wait for the swing cap, and I'm like, nah, fuck that. Starting an ad right now, boys. I don't want to miss the trip higher. Who are the elephants, or who are they? Are they in the room with us? You want to take a peek at them? Let's see if we can take a look at them. You guys want to see them? Who the elephants are? We'll take a peek right now. Hold on. I think we can. I don't know if we can. I tried earlier and got all fucked up. Yeah, here we go. Can I make this any bigger, maybe? Yeah, maybe not. Maybe I can't make this bigger. Let's see who the elephants in the room are. Oh, maybe we could do it like this. Hold on. Do it like that, maybe? Just a second here. Does that help? It might work just like that. Maybe that makes it a little bit bigger. Let's see if we can find the elephants. Let's look at a few things here. This is nice, right? This is at the money volatility. It's expected to go down into the 19th. Right? So there's the August 19th. You guys got this from me last night, right? Today is the 15th, right? Vol should continue to drop. Trade sideways. Now, never trust at the money vol down the road, ever. Never, ever trust it. But, we should probably have some more upside until about the 19th, and then you'd be wanting to own vol into October, end of October. Kind of nice, right? Systematic CTA positioning. No, wait a minute. Let's look at CTA positioning. Oh, look at that. See that right there? A little curvage. So this is CTA positioning. A little curve, right? By the way, this is Gamma Labs. So if you're ever looking to check this stuff out on your own, you can. I want to make sure I give these guys credit. These guys are awesome. But that at the money, a little dip. Remember, they're just dipping their toes now, right? This could translate into stabilizing markets too, even if the macro hedge funds, like somewhere in there, right? Whoop, wait a minute. Dipping their toes now. They're not in, right? They could still roll down over here, so don't count on giant moves to 6,000 just yet. But if we were gonna go to 6,000, if we were gonna make all-time highs, you probably want to see these CTA guys right about here around all-time highs and hope that they push us higher right here, right to 6,000, right? 600. That's where you're hoping that we'd be on a automatic vol curve. What else we got here? CTA positioning on bonds. We talked about this in a market brief as well, right? We said hopefully CTA positioning in bonds will begin to peak out here. Whoop. Right? They maybe start doing a little bit of this. Right? Jump on the CTA bandwagon for stonks. Right? They're long right now bonds, aren't they? Max long right now in bonds. Vol control. Still not good, right? What does this mean right here? So vol control is bad, right? It still hasn't turned around, has it? We want to see that turnaround, by the way. We don't have it yet. No, that's bad. So what does this imply right now? On here. This implies that, at least for the moment, now we're in positive gamma, but you should not expect vol control to turn around unless you begin to see pullbacks get supported. If you begin to see pullbacks get supported, you would expect vol control to begin to turn up. We really haven't had that test, though, yet, have we? So you got to be careful still, don't you? Because vol control is still not here. Means that if they sell the top up or where we are right now or any top where we are, there is still a chance of no catching the dip. This is why we talk about on triggers that you still want to see the roll down get supported, right? Any back tests of the hourly and the half an hour get supported. The new high, you want to see that 552, right? You want to see that stuff happen before we can start to say, yeah, the market's safe. Cross-asset Z-scores. Let's take a peek at this one. This one's fascinating too, right? We talked about this last week, right? Said to you, let's look at NASDAQ. Let's look at SPX. And more specifically, the 5 and 10-day change. This is the 10-day change right here. And this is the 5-day change. This is the important one right here. Right? This is the current, or this is the 5-day change, excuse me. This is the current. It's still undervalued, right? We're still in a low, believe it or not. We're not even that high yet, but they're buying the fuck out of it, aren't they? 10 days ago, they weren't. Right? 10 days ago, they weren't, but the last 5 days, they've been buying like motherfuckers, haven't they? Just buying, 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 buying. And price isn't high yet, either, is it? We're not at 6,000 yet, are we? So this is all improving, NASDAQ, SPX. 2 years a little over. 10 years a little over. Dixie was a little low. The RUT, this is improving too. RUT's improving as well. WTI, look at this. WTI, this is a good one to be watching. So look at WTI, right? It's way down here, but the last 5 days, they're buying the fuck out of it. Talked about CL today, but this right here is looking like it wants to explode, right? Last 5 days, just buying it up, buying it up, buying it up. For what? For an explosive upside move in oil. Expected flows, right? CTA, vol control total. We've got 5 days up, right? 10 days up. Looking pretty good, right? These are your expected systematic flows. And we've got the 5 days down, 10 days down over here. Everything's looking pretty good. Improving, I would say. COT positioning, SPX, asset managers, long-short ratio. Let's take a look at this. Still no turnaround here. Still no turn up. We're a little early on this right here. A little early here. So still no big moves here. Still no we still haven't had the herd come in yet. If you got like an elephant, you got a couple. I'd say if you have the one elephant of the macro hedge funds, now you're getting some more elephants in the room. There's still 3 or 4 out there, 3 or 4 big bulls that have not entered yet. Still waiting for more participants. So we're not quite there yet. But the turn is looking like it's there. Turn is definitely looking like it's there. I would say it's improving. And it looks like Lucan is here. Lucan, can you confirm that the new carry trade is being instigated in the USD yuan or no? If Fed future fund rate is saying we're not going to get a rate cut, does that mean that we're going to exchange, or we're going to take loans for the yuan and come back and buy tech stonks again, or no? Lucan is here in the audience today. If they're going to tell you that we're not getting a rate cut, right? Maybe you go over there and borrow some yuan again, or some yen, excuse me, not yuan, yen, and come back into the States and start loading up on U.S. tech stonks. Oh, no. The elephants are, if you guys read the Market Wizards book, the elephants are like they get to the party late. They get late bull cycle. They're like corporates. They're investment banks buy the market. They're the last people to buy the market. They're usually the last ones in. No, Brad. I'm referring to investment bankers. They like the big, hulky elephants. They don't take a lot of risk. They jump in the late bull markets. They literally enter like the last leg. They swing big dicks, big money around. You're usually the last one in. I think like in the 2020-21 ramp, I think they got in like March of 21. Like took them all the way into, I think it was March or July of 21 is when they actually entered the market in size and like big size. Like the last like 9 months of that market, they jumped in on like all like the Mag 7 shit, or at that time it wasn't called Mag 7, it was called what? What they used to call it then. They got an acronym for it. I forget what it was called now. Yeah, Fangman plus T. That's what it was. Fangman plus T, right? Fangman plus T. That's what they used to call him, right? It was like FAANG. It was more than FANG. It was like FAA. I forget, they kept adding letters to it. That's what it was. Yeah, Fang was the original one, right? It was originally Fang, then it was Fangman, then it was Fangman plus T. There's like an evolution in what you call, or the acronym. And then they went to Mag 7 as the newest one, right? AMD ripping faces off today. All boats rising today. Yeah, the elephant thing was about investment banks. You made some money today, Brad? Right on. Did anybody take the 548 trade for Friday on socials? I think that got 13 likes. He got 13 likes yesterday. He's got 14 likes. 13 likes. This had 13 likes. Oh, boy. There is a trading $5.30 right now. Oh, Jesus Christ. Oh, fuck. You still think the Fed cuts in September, huh, Luke? I think like 13 people voted in that fucking thing. You should read did you guys read the Wall Street synopsis on that stuff? They talked about cars. He talks about car sales too. Check out his comments. The discussion in his articles are fucking awesome. His like discussion threads are really good. I love you too, Stacy. RTXL right here. Well, there's RTXL right up in here. All right, targeted right here. 522.28, I think. 23, 27, 552. So we're above my target. We should get a big squeeze here. Pay attention to this bottom chart. Our close friend of the show, Trader Podcast, saying if we can get above this yellow box. Now they sold it just now, but if we can get above it, we should squeeze. If we can catch above this one right here, squeeze straight up. Bam. So there should be a squeeze. Looks like this is squeeze zone right here. If that helps you out. I look like a fucking furu pumper writing all this in a chart. Like a fucking, this is like TikTok furu shit. TikTok furu stuff. Move that over right there. He's saying, pay attention to what Luke Hahn is saying right now. He's in the chat saying, we really have to pay attention. He still thinks that the Fed cuts in September. Do you think they discuss it at the, I think Trader Podcast was saying, get out of your longs, or either price or longs by Jackson's Hole. There's a lot of discussion that if we get a September cut, that they'll bring it up during Jackson's Hole as well. Now, Rubner was saying don't be short on Jackson's Hole. I think the thesis would be from Rubner would be that if they announce a September cut at Jackson's Hole, you get a squeeze up. You'd sell that Monday. You would sell, but you get a squeeze over the weekend. But you would be looking to sell that after that squeeze of the announcement from the Jubilee. I think he was saying don't be short the action, like don't be short into. I'll repost that Rubner comment for you, but that eighth inning shit, he was like, I wouldn't be short into the event, maybe after the event, get short. Now, I like what Podcast is saying. He's like, why bother? You get long down here and you just get out and leave that volatility to speculators, right? You just exit and get the fuck out. You don't need the last squeeze higher or the bloodbath over the weekend regardless. He's also saying we have to pay attention to the daily USD JPY because it's hitting resistance on the 20 EMA. And you guys get, if you're a pro trader, you get USD JPY updates every day from me. So you want to be watching that, of course. Slap those Elliott waved USD JPY on your charts with triggers, of course, and velocity. Luke Hahn's also saying that the VIX for next week and next month until December has crazy OI. Yeah, it does, dude. Andy Constant's saying he wants to start buying VIX right now. I think as we go up here, it's good to be buying vol for like end of October, maybe end of November, or excuse me, I think like end of October, possibly end of November or beginning of November. Or maybe a ratio put spread, not quite a put spread. I don't know if the put spread will print as guaranteed as the vol spread or owning vol. I think owning vol is probably the better trade, not necessarily the put spread. A ratio spread would be even if we kept going higher to 600. You'd probably still at least be flattish and not get torched. You could trade the market higher and be hedged if we roll down. Yeah, he did, didn't he? I heard that he shorted this morning. I think like owning the volatility is probably wise into November 1st. If you can own vol into near November 1st, I think that's worth the worthy trade. I think the hedge is probably a putback spread or a ratio spread. So if we go higher, you're hedged. If we roll down unexpectedly, you're covered. And I would make that putback spread, like I would date that shit for like December or March. Put real time on it. And I would make the leg lower, a new low below the prior low. I'd be targeting something much low, or wherever our prior low was. I'll take a look at it, I guess. $5,000 or something, 525,000, both of those. Upside, of course, like high as fuck, like 600 or something. Just don't trade 570. Please don't trade 570 right now. Or I should say, don't trade above 570. You're going to see me come out with doom. Don't be buying them 580s and 6,000s. RTX is right here. Here's RTX. $556.26, $553.41 on an intraday basis. It's not a weekly, just intraday. That's a ridiculous trade. It's like more than 1,000% trade. It's like a 1,200% trade. It's fucking stupid. Post OPEX unclenched going into expiration next week, and wait for it. Jackson's Hole starting the day after. I better get long equities. What up, Simon? How you doing, brother? Good to see you. Are you saying short the twos and spoos is already Andy's go-to call? Yeah. The Z scores on the twos was a short. The Z scores are saying, well, yeah, Z scores are kind of saying that. So here goes the Q's trade from last night's market brief right here. I'd like to see the Q. I'd like to see, I'll be honest, like, so QQQs, I want to see it fucking trade 480, fail 480. I really do. I want to see Q's trade 480 or fail 480. IWM coming into target now, trading 212.91. Last night in the Discord, I said to you, IWM based on retail sales is likely going to go straight up and never stop. It ain't even going to pull back. RTY. I was making fun of it in Discord last night because I'm like, this fucking thing, like, of all the indexes, RTY should go straight moon. RTY IWM's going straight fucking moon right now to 212.87. We could reverse here. Maybe we can trade 214.49. We're getting pretty long here, pretty long in the tooth right now on IWM. If you're an IWM trader and you were in the Discord at like 11 o'clock last night, congratulations. You should be fucking rich. I posted a DIA chart for you yesterday on Twitter in the middle of the night. DIA fucking making monster straight vertical. I think I wrote vertical in the Discord. Shit's going to go vertical. It's going vertical right now. If you're a DIA trader, congratulations. Oh, yeah, it's going to rip some fucking heads off. Should expect a little bit of volatility here on DIA. We're at a little bit of a nub here. Just note that. We got a giant gap to fill up here in DIA for a squeeze higher. DIA could fucking moon right now, like straight vert. DIA could literally like go straight vertical here at the end of the day. 12:40 right now. We basically have till 1:30 or 2 p.m. for it to happen if it does. Basically have an hour, 1 to 2 hours left. Yeah, VIX 9-day turning to the upside. Just a note here, though, on the VIX 9-day. We talked about this earlier, right? Said, oh, shit. Right there. So on VIX 9-day earlier, I was talking to you about a bounce on the weekly trigger, but then a follow through to the downside. Whoop, right there. And then more down to go. So VIX cranking right now. Maybe some more down. We could possibly get a little bit lower. I don't know if we definitely get down into the $10 range, or excuse me, $11. Was that $11.40 to $14.35? It's a pretty big ask to get down there because we're in the election season. I don't know if we can get down a VIX 9-day over there, so be careful. VIX is about to start turning around and cranking right now. They're trying to sell SPY right now on this crank on VIX 9-day. Just be careful. It's a pretty big ask in an election season to get down into this buy zone. It's like an election season buy, elevated vol, that kind of shit. Just keep your eye on that right now. Got a little bit of weakness back checking the 5-minute trigger here on SPOOs. TLT, more downside to come. Looking for a dip buy down below at $93 and $95 on TLT. TMF, if you're looking to exercise that trade, it's likely down at $49.23. Also note $52 and $54 on that trade. So looking for triple leverage. Congratulations to Hood Gang. Take your money and run. NVDA, I own this stock here. I don't think it's done. I think it's going up more. I think we're going to trade $140. We are at a little bit of an inflection point right now for a pullback on this is NVDA. You guys know I own this and I've sold fucking puts on it. Fuck all you fucking NVDA bears. I have all your fucking stinky money. Have it all. Have all your money. Walmart consolidating above. Not too much to see here. Look for a half-back trade there. Possibly down to $70. Tesla still cranking, but no breakout yet confirmed. Notice how Tesla is not broken out yet. Tesla looking for a squeeze. Has not happened yet. SPX coming back down to the bottom of this box. We're kind of bouncing around in here now inside of these two gamma bands. Right there so you can see it. Also note that the half-an-hour trigger is coming up to the 5,500 gamma level. Half-an-hour hourly trigger. If we flushed really quick, don't get caught with your pants down. Watch out for a bear plane. The move down here is all the way right here. See it right there? So this is your gamma bar, and this is your move. See it right there? The instigation of this move. They can easily flush you here. This is 5,500, the gamma node. Still no confirmation yet. We'll get on it real close.